Morning all. How are we all doing? Sorry, I'm late this morning. I was absolutely miles away. Didn't realise what the time was. Hopefully the stream won't cut out today and disappear, but we will see. Morning. Oh, Vadivel. Vadivel. Morning. New name. Morning, Steve. Morning, Pip. Morning, Kennelly. Amy. It's time. Steve, thank Crunchy. It's Friday. Definitely. Morning, JC. Morning, Figinia. What happened yesterday with the dropout? I've no idea. I think I had too much running on my machine yesterday. I was sitting here, right? Because it was obviously going nuts. There was ADRs hitting all over the place. The indices were going crazy. Everything was collapsing. We had 200 ADR moves going on the indices. And I was just sitting here because everything was just so manic and fast, talking away. And I suddenly looked up and went, God, chat's quiet. Are you lot still awake? Then I looked over to my monitor on the left, which has got the stream running on it. And I was sitting there like that. And I'd frozen at some point. The stream had locked up. It was basically the streaming software had locked up. But I think I had too many MT4s running. I had 4 MT4s running, my futures platform running. So I think maybe the machine basically went, no, too much. So I've cut back today. I've only got 2 MT4s running and I'm not running futures. Anyway, afternoon, Burke, Ratib, morning even, xrupdate.news. Morning, Jerry, Peter, Christian. Right, so big moves on the yen so far. Huge day yesterday, banked 12% yesterday. Completely wiped out my losses from last month. Banked 2.7% so far today. Yens are still dropping. I'll go through what I've banked in a minute. So news first. Obviously today is non-farm payroll day. We've got foreign currency reserves coming out for the Swiss franc in a minute. So just keep your eyes on the Swissy. Euro's dropping quite hard this morning. Well, euro yen is dropping quite hard, but the euro's a little bit weak as well. So just watch the Swiss yen because I've still got positions on that. I've just scaled out some of that. I'll go through that in a minute. But today basically obviously is non-farm payroll. So 1:30 this afternoon, we've got the unemployment rates for the US dollar and the Canadian dollar. Unemployment rates are one of the key 5 drivers for the markets. Let me press buttons because things are in the wrong place. That. So yeah, unemployment rate is one of the 5 fundamental drivers. So they are very important figures coming out this afternoon. Then we've got IV PMIs for the CAD. We've got Lagarde speaking later. So I'm going to come on and stream at 1:20 this afternoon instead of 2:20. There's no point in trading the New York Open this afternoon on the indices. Have I frozen again? No, I haven't. I'm still moving. Yeah, good. Yeah, the market's going to be exhausted by the time we get to the open, so all the movement is going to be there. So I'm going to stream at 1:20 and we'll watch non-farm payroll unfold. And then we'll skip the US Open because the US Open's likely to be a little bit whippy because it will have put all the volume in. Overnight news, not an awful lot. We've had obviously the yen moving now. This is day 3 of the yen rally, which we've been waiting for. This isn't an intervention. It's just the yen powering up, basically. So there's a bit of talk coming out from Japan overnight, but nothing about FX moves, basically, because the FX market has decided to listen to them and they are moving now. So that's all good. So overnight news, not really anything to look at all. We've had the German industrial figures come out, but that's it. So no overnight news to worry about. There's no ADRs. Obviously, the ADR dashboard was lit up like a Christmas tree yesterday. We had ADRs all over the place. Big day across the board yesterday, specifically on the indices. I mean, the indices absolutely collapsed yesterday. So we were looking this yesterday morning, weren't we, initially for the gap fill play on the DAX. Ooh, did not stop. There was not one bull candle. until I got on it yesterday afternoon. So there was no bull candles at all yesterday. I got in there and I got out there, basically. So yeah, massive day. You didn't. This is the thing. I was trying to figure out whether or not you saw me take this trade. I posted it in the Telegram group in case, well, after the stream, basically. I was waiting for some bullish price action down here. I got in there. It didn't get very far. I was looking for potentially a hold, but I got in with a 1% risk. So I just took 1% profit off of it. Just a quick in and out. But I think there's an opportunity for that gap play today. But after a move of that magnitude, something's going on. So I would be very wary about trying to mean revert this today. That move yesterday on the DAX was 360 off of a 158. So that's 200 ADR we got yesterday on the DAX. The Dow, pretty much the same. The Dow dropped 500 off of a 277 ADR. S&P, the same. NASDAQ as well. We got 246 on the NASDAQ off of a 200 ADR. So that one wasn't quite as much, 125 ADR, but still absolutely massive moves, basically, yesterday on the indices. So something going on. Market is selling off this morning as well, look, pretty hard and fast. So we've got a couple of minutes to the open. Not sure about taking a pre-market on this today. I'd be wary about taking a pre-market break today. Wait for the opening range to settle and see what happens. Very volatile open. Look, lots of big spread, lots of volume coming in. So just be careful today. So this is the DAX. There's your range at the moment. So we're sitting down at this low, but yeah, big volatile open. So if you've taken the pre-market break, obviously that was your 15 and 5 minute low. You'll be short, but just watch this morning. It's very difficult to tell which way this is going to go. It's always difficult. It's impossible to tell which way it's going to go. But obviously, especially after a big collapse day like that, we need to be a little careful. Just wait for the market to settle and see what it's going to do. So the 5 minute ORB today is probably the one that is the best to take. Watch yesterday's low. If we break to the downside, we're likely to find limit orders trigger there. The market will be trying to mean revert this today, all of these indices today, and just get a profit take pullback done. However, this could well be the last push of this move to the downside before they correct. And if that's going to happen, we're going to look for these gap fills to be done today. So not today. I mean, it's no way on earth it's going to get back up here today. But we've now got 2 gap fills to the upside to finish off. So if we get this hit here, there's a good chance of a double bottom, which obviously is a nice play back up for those gap fills. So bear with me one sec. So yeah, see what happens. But this is where we are with the DAX at the moment, obviously. We've got this level down here that I put in yesterday. So this was where I was looking for the bounce yesterday. Initial looking for the bounce here. We didn't get it. It just screamed straight through that level. This is the one we were watching for the gap fill bounce. Straight through that, hit that, straight through that. The next level identified was this red one here, which was a previous level support resistance. This has held quite a few times in the past and been reactive. So we looked at that level. That's where I took the bounce yesterday when we were very close to the level. Didn't quite touch it yesterday, but that's where we started to stop the drop. That's where I got in with that tiny little trade. So watch this level. This is a potential bounce point today. Other than that, gates are open for a drop. So next level I would look at would be here, which is going to be around about 125 ADR today. So if it does break through this level today, you've got potentially a drop 125 ADR again. But still not sure what caused that. There's no news really specifically that would tank the market that hard. So it seems like it was just a big overreaction to the news yesterday. We had that massive rally in the US dollar yesterday off the back of the PMIs. I think the market is anticipating negative unemployment rate figures today, i.e. unemployment dropping today, which gives the Fed the chance to increase interest rates a little bit faster and harder, which they've anticipated that they do want to do. So if we do get that unemployment rate coming down, I think the market is factoring in a rally in the Fed, which is obviously negative index. So I think we just had stock sector sell-offs yesterday with people putting money into the yen, into the US dollar. Obviously, we know money's been pulled out into the yen as well. So we will see. Interesting. So that's yesterday's low being tested at the moment. And then obviously we've just got a tiny little move back down to that 154.80 level, which I've got here as a black line. So that is that previous support. So this area here, I would look to see if we get limit orders buying up this area. So if we get a bullish reaction off of here, might be a good long. But if you're on the downside break on the 5 minute, you're in profit. You've hit target, basically. Always go the wrong way with that one. So 1.5 hour. Okay, so there's your 5 minute ORB. That's a big old candle, that. So that's a 40 point open. That's a quarter of an ADR. Gonna leave it this morning. Oh, sorry, my phone is going mental. Blimey. Me messages at this time in the morning. So there's your 5 minute ORB. Very difficult decision today. So if you're going to sell, if you've taken the pre-market open, obviously well done. If you're going to sell this 5 minute open, you are selling straight into potential support where we're going to get buyers. So just be aware that you're selling into support. Never a good thing. Never buy into resistance. Never sell into support. If it breaks that though, it's going to be a big run. So your choice. But leave it today. Right, we'll wait for that to unfold and have a look at it. I'm not trading it. Aussie dollar CAD. Sorry, Aussie dollar CAD. I'm talking about. That's the first thing on the list. ADRs. There aren't any ADRs today. We looked at the weeklies yesterday. Pound CAD is a weekly. It's still valid. So this has rallied from there all the way up. Didn't stop yesterday. I have a short on it. Haven't managed to get a second position on yet. Is that really not given a reversal alert? No. Struggling to get a second position on this. I think I will when we get this break here. That should be a second short. So yeah, nice initial position on that pound CAD. Second trade going to go in there. In fact, I'm going to just stick a manual on this. 1 second. Got a feeling I've tweaked the settings on this EA, and I've got a feeling it might think that this trade isn't on and it's waiting for an H1 RSI extension, which it should also get into. So I'm not going to put that in there. This should take a trade in a sec. So that is nicely extended. We are beyond our weekly range. New Zealand dollar CAD also beyond its weekly range. So that's your hit to the upside there. 153. 152 is the weekly range. Obviously, we had that big drop down yesterday. So if you did take that one yesterday, you're in and out straight away on that. That was the news. So that was the actual reversal alert. The reversal alert was actually that candle there. So you got in on the news candle and it collapsed, which would have been lovely. Pound CAD, 125 of its weekly range. There you go. So that is still rallying, pound CAD. So good short entry on that one today. If it decides to turn around. Morning, Gray. Morning, Neo. Morning, Thomas. Morning, Nicholas. So there's all your ADRs and your weeklies. Nothing particularly exciting there at the moment. RSIs, there's quite a few to look at the moment today. Let's just quickly see what the DAX is up to. So we're holding the lows at the minute. So we're not quite at that potential support yet. But the dotted line obviously is yesterday's low. So this is limit orders trying to buy up yesterday's low, but not really succeeding at the moment. Looks really heavy. Could be another big down day today. We have got gap fills though, so tricky. Right. Before I do the RSIs, I'm just going to quickly cover what I closed out because we've had a lot of yen, a lot of closes on a lot of stuff. So I'm just going to quickly cover what I've closed out. So Swiss yen. Down a bit. So Swiss yen obviously got into the extension here. And obviously we know what's happened with the yen. The yen's been squeezed dramatically. So that was the initial entry. So pushed up, got into what, 1, 2, 3, 4, 5 positions on it. The profit take move looks like it's starting to happen now. We had this big accumulation, multiple days, as we know. We did get the breakdown, so the reverse alert's gone in, we've retested, we've dropped. We haven't broken that low yet. So because I had an aggressive drawdown control position on this one here, I've decided to take that one off this morning. And I've used half of that profit. I posted this in the Telegram group as well. So that's the close, which was 1.1%. And I've taken 0.6% of that, half of that aggressive drawdown control position, and I've reduced previous positions with it. So done some drawdown control with half of that profit. If this low breaks today, we should get another ADR run on the yen. So I'm not too worried about it at the moment, but there's an awful lot of yen exposure. This account obviously is the one that's been trading on the VPS, and it's been taking every single entry. So it's been completely overexposed on the yen. So I'm just reducing all that exposure down basically because the lot sizing was too big on it. So so banks 12% yesterday, bank 3% so far today. So that's the Swiss yen. CAD yen, completely flat on the CAD yen now. So that was initial entry on the alert there. That was the squeeze. Multiple positions obviously on this one, a few drawdown controls on it as well. But all closed out now in profit. It's actually gone a little bit further. So the target on this one is here, really. I decided to get out of this one early, just as I say, because of the overexposure. There's too much yen on. But that's your target. And obviously, if it's going to do a big, deep pullback, that's your target to the downside. So there's plenty of potential for this yen to carry on pushing. But got out of the CAD yen. US dollar yen closed out this morning as well. That was a really nice, simple, easy in out. 1, 2, 3 out. Job done. 1%. New Zealand dollar Swiss. That one closed out yesterday. That was 2 entries. Initial entry, second entry, exit. So 1, 2 out. Nice, easy position trade. New Zealand dollar, US dollar closed out yesterday. That was a quick 1 in, 1 out. Straight in, straight out off the RSI extension. New Zealand dollar, US dollar. That is that. US dollar CAD. So US dollar CAD is a buy. We are at the 50% fib level. So remember I said yesterday, if you were in the live room yesterday, looking for pullback on this. Shallow pullback be 38, deep pullback be 50. We're at the 50. So potentially there's a good short opportunity on this now. Well, there was yesterday as well, but I was still long on it. So initial entry was there. Bit of drawdown control done as it pushed down. Multiple entries taken, obviously, as usual. And then we pushed up, got out with some drawdown control there. And that was an aggressive position. Got out, paid for all that drawdown, pushed up, closed the whole position out flat there yesterday. So that was all done and dusted. Euro yen. This one was a partial yesterday. So I had an aggressive drawdown control position on this here. Closed that out, which basically paid for all of this drawdown control. Still in it, obviously. Average is here. So a little push down basically today to retest this low. I'll be out of that if we get a 150 ADR on that today. So that's pretty much break even now. So I'm not particularly worried about that one, but I have closed part of it out. CAD yen, again, there was partials done yesterday. That aggressive drawdown control position was taken, but the whole CAD yen is now closed and flat. So that move's all done. I think that was it yesterday, wasn't it? 5th? Yeah, so then we're going back to the 5th, which was some drawdown control on the pound yen. So, yeah, there you go. So that's everything closed out. Sitting in 3.4% drawdown now. There's nothing particularly worrying. Anyway. Can everyone follow you on Telegram? Yeah, you can join the Telegram group. There's no restrictions on the Telegram group. It's free. Go and join it. Links all over the website. Links going on the bottom. So yeah, just go and jump in Telegram whenever you want. It's more of a support area rather than, I don't give signals or anything like that. Everything you need to know is on the website. Yeah, go into the free education, learn the position trading bootcamp, all the information about all the indicators I use, all the EAs I use. Everything's there. Right, so that's a recap of where we are so far. Okay, so we have bought this low. I might take a manual on this. Okay. So I'm going to go long on the DAX. Stop under the low. So 40-point stop, 3R initial target. So I will see how this goes. But the plan here is we are going to start to undo this move. So this is the support we just looked at. Yeah, from back here. So we've tapped into that. The limit orders have triggered, as you can see. So there is a lot of buy limit orders sitting there, which is what I would have expected, especially after a drop like this. So they've taken out yesterday's low. Buyers have stepped in. So we need to see if this is going to hold. So either the buyers are going to rally from here and start a profit take move on that, which potentially would be anything up to 50%, or this is the low of that move, and we're going to do the gap fill, which is going to be roughly 50%, or 71.8 if you're going to do a deep pullback and do that gap fill. So those are the scenarios. Gap fill at 71, gap fill at 50. Don't forget we've got that gap fill as well, which is orphaned now. So we've got a high, a low, a lower high, lower low, looking for the lower high market structure to continue to the south. Yeah. So I'm going to take that long. It's obviously counter trend, and we'll see where we go. It'll either work or it won't. But risk reward wise, it's a no brainer. Look, so risk reward on this trade, even if you just go for the gap fill, the first gap fill, not the second gap fill, the first gap fill is 7R. Second gap fill is 10R. But it's, you know, whenever you're taking a trade like this, Obviously, that's a multi-day hold. We're not going back there today. Yeah. Well, saying that, it's non-farm payroll day. Anything can happen. But unlikely we're going to do 250 ADR. Yeah. Yesterday was the biggest day on the DAX for months. Yeah. And that was 200 ADR. The chances of us doing 225 or 250 ADR the day after the biggest drop, probably not going to happen, is it? But it's just, market does whatever the hell the market wants. So it may well happen, but I'm not banking on it. I'm certainly not going to put my TP in that gap. But if you want to play the long game, obviously that is the trade. So there's your reversal underway. That's a 3R for me. Where's ADR? So ADR is 156.18. Pretty much that. So that's ADR. So if we get an ADR, I'll take the ADR basically. And then we can scale back into it on Monday and go for the gap fill. Right. Okay, gold. Somebody said gold already. Ulam. Too early for gold. Do gold. So gold is a US dollar cross. The same as all the other US dollar crosses. So it'll go the opposite way to the US dollar. Today, the US dollar has massive news out this afternoon. So the US dollar, as you can see, the gold, or rather gold, as you can see, collapsed yesterday because the US dollar rallied. If the US dollar gets positive unemployment rate figures today, it will go that way. If it gets negative unemployment rate figures today, it will go that way. There you go. There's gold. Very simple. It's going to go up or down based on what the US dollar does. This is the propulsion gap we were looking at as a target to the downside, which we rallied straight into and bounced out of. These are the propulsion gap targets we have to the upside, which is 200 ADR. So if we do get the unemployment rate going up, right? So a positive, a higher than expected unemployment rate figure, that's going to be negative for the US dollar. So if that happens, we'll be coming up into 200 ADR, potentially up into those gaps. If the unemployment rate goes down, that's good for the US dollar, which means that we'll push down probably to test the monthly low, which is 100 ADR to the downside. So targets today would be down there or up there, but you're not going to go anywhere until 1:30 this afternoon. So whatever you're going to do, get yourself into a position, long or short, depending on whether you think the figures are going to come out positive or negative. There you go. That's gold. So ADRs. Sorry, RSIs. We've already covered ADRs. Aussie dollar, New Zealand dollar. We've just had a reversal alert on this. This is extended on the 4 hour. We looked at this one yesterday and we had quite a weird whippy day yesterday. There were wicks all over the place yesterday. We looked at this as a rejection area. But it's just not managing to get anywhere at the moment. This Aussie dollar is really weak at the moment. You can see we've had a sort of sideways move here. Aussie dollar, New Zealand dollar obviously is coming down. It's very difficult to tell what's going to happen with the Aussie. I think it's negative. US dollar yen ADR. I think it's negative, and it should be dropping based on what they've just done with interest rates. They've kept the interest rates at 4.1. They needed to increase those because the inflation figure's too high. They haven't. And last time they didn't increase the interest rates, the Aussie dollar tanked. So I think the Aussie dollar is on its way down. The New Zealand dollar obviously gets dragged along with the Aussie dollar. So this is a difficult one to trade. That 4 hour RSI extension could just go sideways, RSI move back up, and then it do another leg down. So there's no real obvious support resistance level we're at here at all. There's no real reason for a bounce there unless you look at that high. But I mean, it could well be a good support resistance level based on that look. But I would anticipate we're going to come back down and fill the propulsion gap. So I'd be short on it. So there is a 4-hour RSI extension. It's not particularly deep. I would probably wait for the 80-20 to be hit. Yeah, 80-20 is much more reliable. Yeah, it's just a bit extended. Nothing particularly exciting. Morning, Keith. CAD Swiss. Obviously, this is coming down hard. So this is extended on the 4-hour. It's also extended on the hourly. Initial position's been taken on this one off of the H1 M5 strategy. So H1 RSI extension, and we've just had a 5-minute reversal alert on that this morning, which has been taken. So there was your reversal alert this morning. There. But it's obviously pushing back down again at the moment, so it's invalidated that low. So you can take another entry on the next reversal alert if you haven't taken that. But that's nicely extended. Canadian dollar is going to move this afternoon. We've got the unemployment figures for the CAD as well, which come out at the same time. It's a really tricky one, non-farm payroll. It always is. And this is why we quite often get whipsaws on a lot of things, because you've got two major currencies that move together here. Both getting news on the same thing at the same time. So if they both get bullish result, all you get is that, because it's a bullish move pushing against a bullish move, which cancels itself out and you get a range. So you get a whipsaw basically. So the only way this one, the Aussie, anything US dollar CAD related massively moves is if you get one positive, one negative. And then obviously there's a massive push and pull, which gives a lot of movement. So the Canadian dollar today could go either way. It's very, very extended to the downside after the push yesterday on the US dollar. Oil is obviously the main thing that affects the Canadian dollar, and oil is starting to rally or trying to rally. So we've looked at oil. We didn't get out of the yesterday's high or previous day's high so far this morning. We've rejected that level. And it's really struggled. So that's where I exited the long. So we took the long here. We exited there. Well, I exited there, which was that trend line bounce. We broke out the trend line. We've come back. We've retested the low. We've pushed back up again. So we're stuck sideways. So this accumulation is looking good. We didn't get anything coming out of OPEC that was particularly exciting. So now that we've broken up above there, be looking basically for a continuation to test these highs here. So that's bullish oil, which means bullish Canadian dollar. So when you're looking at something like the CAD Swiss, you would expect this to rally because it's the Canadian dollar. Oil is going to rally. But the problem you've got is obviously the Swiss franc is also going to rally because the euro is rallying. So, or is going to rally when the interest rates change. So at the moment, looks like a lovely entry. Nicely extended on the hourly, nicely extended on the 4-hourly. We're coming down into a monthly support. If the monthly support fails and we don't get the limit orders buying the monthly low, you've got obviously these lows here at 175-ish, which will act as potential support at 150, 175 ADR. And then you've got that old low down there at 225. So that's the first entry this morning. There'll be another entry at some point on some kind of bounce in there, and then there'll be another entry somewhere around there. Wait, and if it's obviously got all the way down there without doing a profit take move, we're going to be hugely extended on the 4-hour. We'll be super extended on the hourly. We'll be that, down in the tens. Not going to happen, is it? So yeah, just waiting for the bounce. CAD yen we know about. That's collapsing. Oh, great. US dollar yen, CAD yen, euro yen, ADR. Yen still pushing. So yeah, that's still pushing. Never ceases to amaze me, this market and what it's capable of doing. ADR on this is 75. So we've had an 88, which is obviously over ADR. We've had a 115, which is over ADR. And now we've had an ADR. So 3 ADR drops. You've heard me say it many times in here. We climb up the stairs, we fall down the elevator shaft. We've undone a third of that monthly move, a month that's taken to get there. We've undone a third of that in 3 days. Yeah, it's just what the market does. Profit take. CAD yen weekly range hit. So You know, when I talk in the bootcamp about elastic band theory, the stronger and tighter that elastic band is stretched, the faster that snapback happens. Yeah. So when you get market conditions that are moving like that, they move very nicely. When you get squeezes, those squeezes tend to undo themselves like a right angle. Yeah. So it's obviously continuing. No reason why we shouldn't get 175, 200 ADR. They're pummeling the yen. They were told in no uncertain terms by the Japanese, if you carry on pushing, we will intervene and you will all be in massive pain. They've listened. They're doing it what they're told. So these are still coming down. Long may it continue because I've still got longs on the yen. So I would be wary about buying CAD yen at the moment. Don't forget, if we get negative news on the CAD this afternoon, if those unemployment rates go up on the CAD's coming down. If the unemployment rates go up on the US dollar, the CAD's coming down twice as hard. If the oil price decides to have a pullback from that high, the CAD's coming down 3 times as hard. So if you're going to buy this, be prepared to be in it until that propulsion gap is filled. So deep pullback, be 71.8 level before it has a chance to rally back again. So just be wary about buying the CAD yen. I will be getting into this because the EA is set up to take all the trades. So on this account, this will be taking an H1 M5 mean reversion on it. Yeah, so that entry there will be long. But just be careful and be prepared. Be in it for a few days, which is not a problem. That's normal. But all I would say is if you want to skip any RSI extensions, probably the ends at the moment. Euro CAD. So you can see we had this massive push yesterday. Crazy, 152 off of a 98 ADR, 150 ADR yesterday on Euro CAD. So big, strong move. We are well extended above the hourly RSI. We are extended on the 4 hour, just over the 70, not quite the 75 level. So that's pushing up nicely. Euro should be bullish. We haven't managed to get those bullish moves out of the euro recently, but it is bullish. It is starting to retrace now. We haven't had a 5-minute reversal alert yet this morning. That will be your first one. So there's your M pattern reversal going in now. So that will be your first reversal alert. So that will be my entry short. Nicely extended. What more can you say? Target wise on that, got multiple levels to look at for targets. That would be the obvious one, which is the previous day's high. That's a 50% retracement on that move. Pound CAD, massively extended. Looking for a second entry on this one. So I'll be taking that short. Already got one on, which is 77 away, which is 105. It's going to be tight. $78. So that reversal alert needs to be 78 away from the initial entry. So this is where the EA, the market reversal alerts EA, is possibly not going to take that because I've got mine set up to get in 3/4 of an ADR apart. That's just literally a pip under 3/4 of an ADR. So what I would like to see happen this morning is this push up higher, and then the reversal of rectangle will trigger back onto the low of that candle. That should give me my entry when we get that reversal. So I'm just going to watch this pound CAD. If we get a reversal alert and I don't get triggered on it, I will take a manual. But yeah, nicely extended. Very nice extension on the hourly and the 4 hourly. So yeah, we're looking for a profit take move on that. 4 hour is absolutely off the charts. Look. So in this week, we are at 125, aren't we? Yeah, pound CAD, look, 125 of its weekly range. And US dollar CAD is the other, extended to the upside. Got out of US dollar CAD yesterday. Still pushing. 4 hour RSI extension, hourly RSI extension. Didn't get a short on this yesterday because it got extended while I was long. So obviously didn't take it short because I was positioned long. I'm now flat, so I have an opportunity to short this. It's not extended on the hourly. I need an extension above 75 before I'm interested. So if you want to take this short, though, go for it. Just be aware, this is the one today, US dollar and CAD at the same time. This could do absolutely nothing. It could go parabolic 200 ADR. Yeah, so just wait and see. But we can't obviously forecast what's going to happen, because what will happen based on what the news is. So we don't know what's going to happen at all. But it is extended on the hourly and the 4 hourly. So if we do get a rally on this today, you're going to get massively extended on this. The propulsion gap target is there, which is 200 ADR. So just think about today, we get a reduction in the US unemployment rate. We get an increase in the Canadian employment rate. That would be the ideal scenario for a long on the US dollar CAD. This will shoot up 200 ADR. That will be extended all the way above there. We don't get up there. When we get up here, we pull back. Yeah. So by the time they get there, that entire move from that low all the way up to there will have had no profit take on it. So that will come down, elastic band theory, massively stretched, massive ping back. So no problem taking a short on it. If you do get in short today before the news, be prepared for a scaling up to 225 ADR when that propulsion gap gets filled. It could also push all the way back up to that level, which is your next resistance. But unlikely it will get all the way up there before it has to pull back. So looks good, US dollar CAD. So there you go. There's your RSIs. Aussie dollar yen I can get out of. I have to think about that one. Anybody got anything else they want to look at? Because I've covered everything now this morning. Oh, blimey. Okay, so DAX potentially does want to go shorter. See if this holds. Hopefully, this is just part of a W pattern reversal, but not looking good. Always a risky trade. Swiss yen ADR. Always a risky trade when you're trading. Basically, a support. Yeah, here. If the support doesn't hold, it's just going to collapse. So we really need the buyers to step in on this. That propulsion gap hasn't held very well at all on the 5 minute there. Actually, we didn't even get a propulsion gap. Look, didn't even get one. So yeah, that might be a fail, that one this morning. That's the best trade of the day, though, I think. If that does hold and we break that high, there's your W. There's your W. Yeah, so when we break that high, yeah, that's the reversal alert there. That's the last bullish move, but that's the open, so you can't really class that. But that's your W pattern. So that'll be your entry. If you want to be safe, that's the safe entry above that high. I'm on the aggressive entry. Morning, Monica. Morning, Nicholas. Evans, Euro Yen is collapsing. Yeah, coming down. Not sure what to say about that. It's due a big profit take move. So my TPs are down there. I will be out way before that. Watch this propulsion gap at 150, 175 ADR. If we get down to there today, which is just over 150 ADR, that's probably where we're going to get a bounce. We're going to get limit triggers down there. So that's where I would probably say to get out. Yen. But obviously this yen, this yen has potentially got days and days and days of strength ahead of it now. So, obviously if you're in positions short, especially squeeze positions like this, your goal is to get out of the squeeze, but you don't want to get out too fast, because obviously there's potential to make a lot of money as well. So, however, when you've had a squeeze that strong, it just shows there is massive weakness in the currency. So that weakness can continue. The euro is bullish as well. So all the trades, all these yen trades that I've been in, which is basically all of them apart from the New Zealand dollar yen, you can see why the euro yen, the Swiss yen and the pound yen are the ones that I'm still in, because the euro is bullish, the Swiss franc is bullish, the pound is bullish, the Canadian dollar is bearish, the Aussie dollar is bearish, and the US dollar is bearish. So those are the ones that I'm out of. Yeah. US dollar yen, flat. CAD yen, flat. Aussie yen, still in it, but in profit. Yeah. Because they're the weak currencies. The strong currencies at the moment are the euro and the Swiss. So the Swiss yen, the euro yen, still in those. And look at the movement that we've had on the Swiss. And then look at things like the CAD and the US dollar, which have done like at least a third of the retracement already because they're weak. So, currency strength is a key thing. This is why, the bias scorecard is there. So we can see what's strong at the moment, what's weak at the moment, what should be happening. Yeah, the pound yen, Swiss yen, the pound yen, the euro yen are the three yens which are buys. The other yens that I'm out of are all sitting in the neutral zone. US dollar yen, CAD yen, New Zealand dollars and yen's in there, and Aussie dollar yen. Yeah, they're all sitting in the neutral zone because they are weaker than the European currencies at the moment. So there is more chance of these European currencies doing a flag break, new leg, than there is the US currencies. US currencies are more likely to do a deep pullback. Which is why I don't think there's too much problem trading everything with reduced risk. So if you're going to follow the 2 exposure rule, obviously with a higher risk, then follow the 2 exposure rule, use the bias scorecard to pick the ones which are going to be stronger and trade those. If you're going to trade everything, some of them are going to work out, some of them aren't, even if you're trading the same currency. So good example, basically, of how currency strength works. Can we look at UJ and what you think about trading since non-farm news? Well, I mean, anything you enter on the US dollar or the Canadian dollar today, you are flipping a coin. I'm flat on that at the moment. I'm out of the short. So, yeah, I mean, basically, if you take a trade now, right now, this afternoon, it's going to be either there or there. Flip a coin, long or short. Regardless of where it is now on the RSI and where it is in relation to a profit take move, market structure, anything, this afternoon, the entire market structure overview for the US dollar moving forward over the next quarter is going to change because the unemployment figures are coming out. So same with the CAD. This is why the key fundamentals are on the website. These things are what drive currency. Yeah, this one today is going to have a new number. So this will shift the US dollar and the Canadian dollar bias over the next 4 to 12 weeks based on what that figure is. That unemployment figure, if it comes out as a massive positive, i.e. The US dollar unemployment goes from 3.7 and it jumps up to 3.8 or 3.9, US dollar is going to collapse because they're not going to be able to put their interest rates up, which makes the US dollar bearish. Or they will still put their interest rates up regardless of unemployment, except the market won't be interested in buying it. Yeah? They'll do what they need to do to get on top of inflation. And the same with the Canadian dollar. We're sitting at 4.75 at the moment. Inflation's coming down really fast. Their unemployment is at 5.2. Not good at all. And it's going up, which means that it puts a lot of pressure on them not increasing their interest rates, which is bearish Canadian dollar. Oil prices are stagnating, which is bearish Canadian dollar. If that thing goes up, that's massively bearish Canadian dollar. So whatever you take a trade on the CAD or the US dollar right now today before 130, it's going to go parabolic one way or the other, isn't it? Or it's just going to whipsaw and you're going to end up exactly where you are. So the other option is obviously what we get is quite often that, and we're still none the wiser. So, don't forget news. When news comes out, there's 3 options on news. There's bullish, there's bearish, and there's neutral. Neutral can act as bullish or bearish. If the market gets what it's expecting, if we're expecting we're on 5.2, on 5.2, we're expecting a 5.3 and we get a 5.3. If the market's been buying the Canadian dollar, it will continue to buy the Canadian dollar because it's been bullish on it most of the time. So when you get a bullish news event, it tends to be bullish currency, i.e. a green number. When you get an as expected, it tends to be in the direction the currency was moving, which most of the time they will buy into news. So you tend to get a bullish move. If it's negative, you get a bearish move. But with things like the US dollar at the moment, every bearish news event we get is not just bearish, it's catastrophic. 150 ADR drops on it, yeah, because the market is scared to buy the US dollar because it thinks it's sitting at its terminal rate. But it's been saying that for ages. So we're just finding weakness in the US all the time. All these interest rates, as you can see, I mean, forget Japan because they never change, but and gold hasn't got one. But all these interest rates, they're slowing down to 0.25% and no changes now. So we are hitting that terminal rate in interest rates where it's becoming, incredibly dangerous to increase them because you are basically going to cause a housing market crash. People won't be able to buy houses. They won't be able to remortgage. They won't be able to maintain. The housing market will collapse. When the housing market collapses, it takes money out of the economy. When that reduces your overall GDP, it makes everybody poorer. Inflation comes down because no one's got any money. But unemployment goes up because businesses have to can jobs. So, we're at a very, house of cards. If you're playing Jenga, right, we're up at like 40 blocks now and you haven't got any choice but to pull the middle ones. At some point, this is all coming down. So tricky today. Thanks for the follow, whoever that was. Ivan, welcome aboard. I missed Julian yesterday. If you're in here, Julian. Do you ever look at 100% peak formation high low with 3 ADR? No. I remember you used to teach that back in the day. No, I didn't really teach it. No, I used to follow it, but I disproved it more times than I proved it. So, no. The 3, I used to have a dashboard, which was kind of like a Steve Mauro BTMM type dashboard, and it had the 3 ADR push on it using the 1 hour chart, and it used to measure how many pushes currencies had done. I ran it after I built it. I ran it for a good 6 months, watching it, using it, and more times than not, I would see 4, 5, 6, 7. And you just think, the 1 push, 2 push, 3 push, 4 push, pull, get around, 5, 6, it's just useless. So if you just keep selling these 3 ADR pushes all the time, you're going to get roughly a 50% strike rate. Useless. Doesn't give you an edge at all. Dumped it. It's like everything. And I've said this many times in here before, Nathan, haven't I? If you've been in it. Every system and every strategy you find out there has a good strike rate and a bad strike rate. Yeah. But the thing is, people will never take every opportunity. So if you get a 3 ADR push and you miss that one, the next 2 that you take will go to 6 ADR and you'll go, oh, that doesn't work. Yeah. So you'll move on to something else but then the next 2-3 ADRs will work beautifully and give you a 5R return. You just didn't take them because you'd already system hopped onto something else. It all works sometimes and it all fails sometimes. The reason it all fails, though, is because you use a stop loss. If you remove the stop loss from the equation, every single one would work. This US dollar yen, it's a 6 ADR push. Let's look at the CAD yen. That's a much better example. I don't know how many pushes this is. Depends how you. Again, this is something else, which is why nobody should ever use trend lines. Yeah, they're subjective. You give 10 people a chart and tell them to draw a trend line, right? You get 10 different trend lines. You give somebody this chart now and say measure 3 pushes, you get different measurements. Some people will go, that's 1, that's 2, that's 3. Some people will draw it differently. They'll go, well, that was a pullback, so I wouldn't class that as a push. That's definitely a push and accumulation. That is a push and accumulation. Then it had a pullback. So I'd class that as a push and accumulation. There's an infinite number of ways that you could draw the same thing. So anything that is subjective is useless in trading because you can't build a system or a strategy that multiple people can use in the same way. RSI extensions are cut and dry. It either is or it isn't. It is. Prove me wrong. You can't, because it is. It's a fact. Yeah. Whether that is 1 push, 2 push, 3 push, and an RSI extension is subjective. Can't use it. You can use it, obviously, but you can't teach anybody else to use it because people will give you a different scenario. The market reversal alert. That is a market reversal alert. Can't be anything else because the last candle that pushed, the low of it got broken. That's the rule. It's hard in stone. That is a reversal alert. No one else has got anything different. That is where everybody's reversal alert is there as that drop happened. So, you got to use stuff in trading that is solid and everybody understands and everybody can see, and you can automate, because if you can't automate it, you can't backtest it. If you can't backtest it, you can't find an edge. If you haven't got an edge, you might as well just be flipping a coin. But every single strategy that fails because of the stop loss. So if you'd have taken a 3 ADR push on this, for example, you'd have had a stop there and you'd have stopped out. So you'd have taken the next one. That one, you'd have sat in it for days and days and days. And if you followed Steve Melrose rules, he'd have told you to get out because it's not going anywhere. Then it collapsed. It just stops. That's what kills everybody. Don't want to be greedy on the yen pairs, but I want to take my drawdown controls back. Is there any problem here? No, do what you like. All the ADR pairs that are ADRs, obviously, ADR is there for a reason. It's hit its average daily range. The market will be exhausted most of the time at its average daily range. Yeah, 60% of the time when it hits that level, it bounces. So stop. Take it. If you've got profit, take it. You're going to be in different positions on these yens. So, the Aussie dollar yen, I can close it out now, and I probably will actually because it's still exposed 4 times. But up to you, really. I don't know what your position is, but you can also do partials, don't forget. So like with the Swiss yen, I've done partials this morning. I haven't closed it. I've done partials. I had the opportunity to close it all out at break even because I've already banked 3% off the yens today and yesterday, all that profit. So up to you what you do. You can take a partial, so you can close some of it out and then do some partial drawdown control, or you can close some of it out, which pays for the drawdown control you've done so far, and just wait. But look at the moves that we've had on these. Yeah, we haven't profit taked yet on most of them. Go back in time, look at what happens. The yens are a bit tricky because this is the mother of all squeezes on the ends. But look at other pairs when you have a big strong push, what the retracements are on them. Yeah, big strong push, retracement, big strong push, retracement. Normal market structure is somewhere between a 38 to a 70 retracement, somewhere in that region. Yeah. So if you got a move, when they take profit on that move, dependent on whether it's a bull or a bear or whether it's going to go into a range, we'll either do that, or that. If it's going to continue long. If it's not going to continue long, you're going to come back to source. If it's a peak formation high, you're going to put a new low in and come back up and do that, aren't you? So you don't, this is a good example at Euro odd. Look at this massive move. V-shaped recovery. Big strong push. Profit take. 71.8 retracement. Big strong push. 50% retracement. Big strong push. 100% retracement. Big strong push. 38 retracement. Yeah. Look at the yens where you are now on all of them. That's a 38 on the Swiss yen. That's a 50. Look at how far we've come. Look at how far there is to go. Potentially, we don't know. This is the thing, you do not know. Nobody knows what is going to happen next on this. Yeah. So if it's going to be a flag, which I would class as a 23 retracement, we're going to do that. And then we're going to push for a new leg. But if we do that, I can get out at break even. So your question is always going to be in a position that you've been in a squeeze on. Where are we going next? Is this a flag break long? Is the yen bullish or bearish? Is the Swiss franc now bullish or bearish? The fundamentals when you took that trade 3 weeks ago may be different now. I think the yen is going to power up for a few weeks personally, because I think the market has had its fill of yen and the shot across the bow has worked and the Japanese are now going to rally it. However, I also think the Swiss franc is going to power up when the euro rates are announced. So that is to be bullish against bullish, which equals potentially range. So it could flag that one. Aussie dollar yen, on the other hand, I think the Aussie dollar is now bearish. I don't think you see any reason why we couldn't get a retracement back down to the 72, back down to this level. Deep pullback, because I think that is bearish and that is now going to be bullish. However, I might be totally wrong on that, because the US dollar rates may change this afternoon and completely change the outlook on the yen. If the US dollar starts to collapse, the yen will probably weaken. Difficult, this is trading. This is why you can analyze everything until you're blue in the face, but the market will go where the market will go based on the fundamentals, and the fundamentals at the moment aren't necessarily doing what they should do, because they're in a position we haven't been in off the back of a COVID recovery, in the middle of the start of a housing market crash, in the middle of a potential world war breaking out, and an energy crisis and food crisis. We've never been in this situation before. So there's absolutely no way you can tell whether or not you should hold that yen or not. Sorry, I can't be any more help, but that's where we are. So deal with your portfolio basically as you see fit. Morning, Grateful Buster. Nebo, sorry to interrupt you on your thought, but I'm mostly NASDAQ S&P trader. Well, you shouldn't be here, should you? Because it doesn't move until this afternoon. I would love to utilize your strategy. Where do I start? Bootcamp is nothing to do with indices. Opening range breakout. So if you want to trade NASDAQ and S&P, that is the EA, the ORB EA. Which trades opening range breakouts. Oh, you git. Stopped out. On DAX. Sorry, did I not just take a DAX long? Where's my trade? Saved by the bell. Right, okay. Now there's an accident that was actually good. I forgot yesterday because I took that long yesterday. There's my trade. I just made a profit on it because I forgot I'd set up trailing stops in the Price Action Toolkit, which I shall now turn off and get back in. That was lucky, wasn't it? So I would have stopped out on that long. So there is your W pattern. Stop run W now. So long again. I just stopped out. That was an lucky. This is why you need to check your settings in EAs, people. Yeah, I put that trailing stop on yesterday because yesterday I took that here. So that was my entry yesterday. Get out, right? That was my entry yesterday. Yeah, so we were waiting for some bullish price action. So I took a break of the high of that candle there, added a second as we broke that high, which would have been a reversal alert if I had the reversal alert indicator on here. So I added on the reversal alert. And then I put a trailing stop on it because I had to go out spinning, go out to my exercise class. So I put a trailing stop on, which obviously stopped out because it didn't go anywhere. And I had that still set up on the Price Action Toolkit. That was lucky, wasn't it? So we'll see if this second one works. That stop's a little bit tight. If I risk a bit more, I'm going to do it. I'm going to do it. I'm going to extend my stop. I shouldn't do this really, but I'm going to go $500 stop. Sorry, £500 stop. This is a pound account, not a dollar account. Aussie dollar yen ADR, pound yen. Sorry, Aussie dollar yen RSI extension. Pound yen's just hit ADR. So pound yen ADR as well. So yen coming down hard. Yeah, look at, that is potentially what we could see. That's a flag break. I don't think it is. I think we're going to get a decent drop on this now. But I'm waiting for a gold signal. Good for you. I don't trade gold. Lee, where you think DAX is headed? So gap fill on DAX. If it goes long, obviously, if it doesn't break long out of this accumulation, we're going short. If we're going short, ADR just drop. No idea today. There's no support coming up. So this propulsion area here, anywhere in there really, but long gap fill, which is 250 ADR. So this trade here, you got two choices. If you get into it now, I'm getting in with high risk. This is a 1% risk trade, so I'm not going to hold for the gap fill with a 1% risk. Personally, I would be out at ADR today, but yeah, there at some point next week. But don't forget, we've got non-farm payroll this afternoon. We've got the Canadian and the US unemployment rates coming out. So there is potential for all indices to go crazy, as they did off the PMI figures yesterday. They could undo this entire thing today. We could be back up at that gap fill Monday morning. But at the moment, it's not going anywhere. So this is just a pure speculative 50-50 shot on the basis of we haven't done a profit take move yet. So I'm long. But at the moment, it's not going anywhere. I know you use Forex for some of your trading. Which server do you use? ECN2? I don't know. I've got loads of accounts. They're all the same. I mean, they all got the same pretty much. So I don't get a choice of server. I get, you get given the server. You don't choose the server. I'm here because I like listening to you. You pour out some incredible knowledge. That's always good. Yura, morning. RM, question, how is E8 funding MT5 performance? Don't know, I don't use MT5. But it's not E8's MT5 performance, it's MT5. MT5 is, in my opinion, the worst thing they've ever done. It's terrible. Its graphical user interface is laggy. Indicators don't work on it. The conflicts are ridiculous. It auto updates and breaks constantly. If you're going to trade with MetaTrader, use MT4. Full stop. All brokers support it. If they don't support it, change broker. The reason brokers haven't dropped MT4 is because MT5 is crap. Just don't use MT5. The indicators and the EAs that I produce and sell, less than 10% of the sales that I make, which isn't a lot, but less than 10% of them are on MT5. 90% of traders use MT4. So if you're new to trading, you're going to pick a platform, MT4. And if they force you to use MT5 for any reason, the broker or the prop firm that you're looking at, change. Because your life will be hell on MT5 and you'll just give up. Euro Yen 125 ADR. That's in profit now. I'm going to close my Euro Yens. Not going to get greedy today. Okay, flat on Euro Yen. Not going to push it. It probably will come down further, but if I was in that on its own, I'd probably do some partials and stuff, but still got triple exposure on the yen. So Aussie dollar yen is also in profit now. So might shut that as well. Although the Aussie dollar yen, I think, has got a lot further to go. Of all the ones, if you look at all the yen pairs, yeah, and look at what the Aussie dollar yen did, right? So the Aussie dollar yen did a lovely big pullback, which is where I got out of partials. We pushed back, we made a new lower high, then we made a lower low, then we made a lower high, then a lower low, then we came up and made a higher low, and then we've now made a lower low. So the market structure on this is nicely bearish. I think we've got a retest of this area because I think the Aussie dollar is going to be weak moving forward. As long as we continue this yen strength, we'll be fine. If this yen strength does wane, I still think the Aussie dollar is going to be weak. It's just whether or not it's going to be weaker than the yen. That's the question. So this hasn't hit ADR yet either today, so I'm going to hold on to that. I'll give it the rest of the day. The other thing, obviously, is the yen may well power up dramatically if the US has negative figures this afternoon. So there is potential for a much bigger move on the yen today. There's also a potential for the yen to get completely undone today, depending on the news this afternoon, which we'll find out in the afternoon session. But we'll see. Pound CAD. Yeah, second entry on Pound CAD. Just gone in. That reversal alert there. So there's your reversal alert. So that's my second entry on the Pound CAD. That's nicely extended and embedded on the hourly RSI. Yeah, so there's your RSI extension. The danger area on this is here, which is the previous month's high. Obviously, my average is now above there. So I'm just going to adjust TPs on this. So that's where I'm going to stick TP at the moment. There's a potential that we will hit that and get some limit triggers. There's also a chance that they will come down and sort that inefficiency first, or unfinished business. That's kind of filled. That's a long way away. Pound is bullish. Canadian dollar at the moment is bearish. Actually, I'll tell you what I'm going to do today. Today only, one time only. I'm going to put the TPs down there. Reason being is obviously we get CAD news. If CAD does a 175 or 200 ADR move off the back of the news, i.e. we get a massive drop in the Canadian unemployment rate, and I mean massive, it's going to have to be a big one, the pound is going to collapse against the Canadian dollar because the Canadian dollar will rally. So ordinarily, I would say that's probably a bit too far to target. However, on a news event, 200 ADRs are normal. So, however, if we do get back down into there at ADR, I will probably close it. But we'll see. You know, if we get a massive spike off the news, then yeah, it's worth taking it. But yeah, good short. First entry, if you're not in already off of yesterday's RSI extension. Good short. Just had the reversal of that. M15, you've just had the reversal alert as well. Same as M5. Thanks for the Euro yen. I am out. Good day. Good man. You watch this now go to 200 ADR. I'm notorious, by the way, if you're new in here, for getting out too soon. I'm always out too soon because I like money. So when I get out, many people get in because it's quite usual for it to continue. But yeah, I need a green. I like green. Right, just a quick look at the DAX. So the DAX is really stuck. We're not going anywhere today. So I would watch this inside bar. So a safe trade today. We've got another 49 minutes left on this candle, obviously, this hourly, right? But that low there has potential to be low of the day. Now, we've pushed out the lows. Buyers have stepped in. Sellers have tried to push them back. Buyers have resisted. We are making new lower highs continuously, though. So if we now get a higher low put in, and then we break that high and that high there, that I would say is probably the low of the day. But I don't think you'll find we'll get much movement today because we're waiting for non-farm payroll. They're not going to really rally or drop massively hard when you've got a massive news event, potential market shifting news event coming out this afternoon. So we will probably rotate for the session. So if we can get a push up on this, what I would do is get them positioned into break even. So, you know, kind of looking for it to get up to here somewhere. I would probably break even it. And if it stops out, it stops out because that's probably what we're going to do today. However, if it is going to drop, we have broken that support level. Sellers could be in control. We could be dropping on it. So in which case, obviously, I'm going to take a loss. But that inside bar break, if we get an inside bar here on the hour, i.e. we don't break that low, that would be a lovely looking long. Stop under that low. So, you know, that's a 7R. By the time you've actually taken the break there, though, you're probably looking at something like 5R. 4R into the gap. Multi-day hold, obviously. Unless we get something crazy this afternoon, but which is possible. But we'll see. Doesn't look good at the moment. Nathan, how should we use the fundamental scorecard? Would we pass on anything that goes against? Up to you how you use it. All the bias scorecard is telling you what the fundamental bias is. So the it's all written on the on here what all the information is. Yeah. So just go and read it on the website. But basically all this is doing is it's scorecarding. For those that don't know what a bias scorecard is, scorecarding is what the banks do and the institutions do to decide what the fundamental bias is on an instrument. So all a scorecard is an amalgamation of all the fundamental data that drives a currency. So interest rates, inflation, GDP, unemployment, housing starts, housing permits. There's a lot. So everything you see basically on Forex Factory, CPI, obviously we know about, PMI figures. We've only got PMIs and stuff this week, but all this stuff, claimant count changes. This is all basically scorecarded by the banks, and the banks basically allocate a number to each particular news event, and the variance that it has from forecast will give a score. And at the end of it, there's around about 50 different items usually used, somewhere between 30 to 50 items used in a scorecard, which will give you a plus or a minus at the end of it. And that is what the analysts use to tell the traders what the long-term bias is. And then from that, you get what's called the COT report, which is the Commitment of Traders report. This tells us what the positioning of the banks and institutions is on the futures market, which is where the institutions tend to place their long-term investment positions. So this COT report tells you what the long-term view of the market is in general. So this is like your 50,000 foot view. At the moment, 65% of institutions are short on the Australian dollar. So that tells us we don't really want to be buying the Aussie long term. Short term, intraday, intra-week, fine, because this is a 4 to 12 week outlook. This is a 24 to 72 day view, which is why on my charts I have the 24 and the 72-day moving average, which is your monthly and your quarterly bias, which is based on COT. So you can use that data for a long-term overview. Obviously, retail sentiment is usually wrong. So when the market is positioned in one direction, it tends to go the other way. So you got that information there. So you can use it all to bang it all together in any way you want. But this is just basically a quick overview of where are we with the fundamentals. And these are the core 5 fundamentals. These are the ones that drive the markets the most. Everything else. So in an institution, when they're scorecarding basically interest rates will be given a score out of 50. Unemployment will be given a score out of 25, for example. And the deviation or the variance, which is this column here, the change, if you like, you can actually see that on there as well. There's a differentials is what it's actually called, but it's a variation basically. The differential is what's the difference this time to last time, basically. That differential will be given a score as well as what the actual is based on what the forecast was, and it all goes together to give you a plus and a minus. So this is overall, based on the fundamentals, what should happen is the pound should go up against the Canadian dollar, right? Whether that happens or not, don't know. And this is just a what might happen at some point in the next month to 3 months. Yeah, this isn't a case of today the pound CAD is going up. If you want to know what it's doing today, you look at retail sentiment. Intraday, this is pretty accurate. If they are all going short on the New Zealand dollar CAD, the New Zealand dollar CAD is likely going up. On the screen. Yeah. But New Zealand dollar CAD is going up because everybody's shorting it. So if you're shorting it, where's your stop loss? At the high. And if the market needs to fill orders, it needs to go and find liquidity. Where's liquidity? The opposite end of where everybody's orders are. If everybody's orders are short, liquidity is all at the highs. So every time they go short, they put a stop, they go and grab it. Every time they go short, they put a stop, they go and grab it. When they go short, they'll put a stop. they'll go and grab it. And then all of a sudden retail will go, oh, we've been shorting this and getting stopped out all the time. Look, it's a long, so they all go long. Then the market goes down. And then they go, hang on a minute. That's what I was doing before. I was right, so I'm going to go short. Then the market goes up. Because they're stupid. No other way of putting it, is it? That's why everybody loses money. And all the brokers tell you that before you start, but nobody listens. 83.1% of people lose money with Axie. If you walked into any shop and said, hey, come in, give me £1,000, I will give you back 17. Would you give in £1,000 to that person? No. So why do you do it in your broker? They're telling you that 83% of your money is going to disappear when you put it in here. Nuts. But hey, that's retail. So use the information as you want, but read up on it. So it tells you on here what everything is. How you use it is entirely up to you. There's a million ways to use it. But it's all there. It's all updated live. So again, like everything in trading, there's no rights, no wrongs. New Zealand CAD is just coming up to yesterday's high. So watch for limit triggers there. Got a tight reversal alert on that one as well. But don't forget retail. They're all short. I'm going to get out of this Aussie yen. I just want out of the yen, basically. Flat Aussie yen. Well, I just don't want to push any of this today. Because it's been in a squeeze for such a long time. Tammy, morning. Tell me, even on volatility index, market reversal does not perform well. I don't know. I've never traded it. It's a synthetic index. Loads of people tell me that the market reversal alerts indicator is fantastic on the VIX. Works like a dream. I've never traded it. I don't trade anything that's synthetically manufactured by brokers. Think about what you're trading when you're trading a synthetic index. Yeah. It is a price plotted on a chart, manufactured by a broker, manipulated by a broker. When you go long and put a stop loss on that chart, and he has the power to move it up and down because it's his index manufactured by him, what do you think he's going to do? Considering the fact I've just shown you on the Axie website that 83% of people lose money with their brokers in this particular case. Yeah. If you trade the VIX with Axie and they control the volatility of the VIX index, yeah, don't forget a volatility index is an index of volatility in the market. It goes up and down a lot. No two brokers are going to give you the same information. Yeah. So if you've got a load of stop orders there and a load of stop orders there and prices sitting there, the broker's got the choice whether to push that up or down using either spread or just one price candle to take all of that money. Why do you think that figure is there? So many people trade this synthetic crap. It's the same as binary options. It's all manufactured and manipulated to just basically take your money from you. Stop it. Volatility index is there to show you the volatility of the market. It's a measurement of whether the market is in big or small movement mode, i.e., should we be taking small profits or big profits? This is what I use ADR. The average daily range is as close as you'll get in any market to the volatility index. It shows you what this instrument moves on average in a day. Yeah. If it's volatile, it's going to go beyond that level and it's going to move faster. And the ADR will adjust dynamically every day based on what it's doing. Yeah. Volatility index will do what the broker decides to do. when it paints a candle, it paints what the broker decides the volatility index should do on that time. So yes, the market reversal alerts indicator will work fantastically if you were to take that short there. If you took that long, which you would have had there, you'd have got stopped out. I don't know. You know me. You've been in here long enough to know that I produce a lot of indicators and EAs, and I use them all. But I don't use them in a traditional way with a stop loss like everybody else does, because you get stopped out. Do I use Axie? I used to. I don't anymore. I moved away from them because their data started getting a bit, their platform started getting a bit twitchy. So I use Robo now at the moment. But I'm finding, actually, it's been good in the last couple of weeks. I've had problems with Robo locking up a lot. That seems to have abated now. All brokers go through the same problems. Basically, what you've got to remember is a broker is basically running a bank of servers serving data to software. It's a computer. They go wrong. Neo, are you in position, please? Yep. Lots. Always. I'm a position trader, Neo. Hence the title. I'm always in a position. If I'm not in a position, I have no risk. If I have no risk, I can't make money. I'm always in a position. Anything specific? Right, that's all I've got for you this morning. So just watch these yens. I've only got 2 more yens left on now, pound yen and Swiss yen. Both very, very close to break even. So we'll see what happens this afternoon. These are either going to get there or not. So they're all reacting off of ADR at the moment. So ADR reversals kicking in on these. So M5 Swiss yen, you're about to get a reversal alert long. But look at that, bounced off of my average. Nice. So yeah, there's a few ADRs to look at today. Just be careful with the yen ones, basically. Yeah. These ADRs are all yen, right? But just use your heads, yeah? We've been waiting for a month for a yen move. It started. So just be careful. If you're new, Neo, by the way, just go and watch, follow the links on the bottom of the site of the stream. Everything you need to know is on the website about me, how I trade, products I use, everything, what I do. Right, DAX still in it, long. So just before I go, we've broken. So there's your low, your W pattern reversal, stop hunt reversal. There's your higher low. Yeah, we've broken that, move to the downside. So we've broken that high, we've broken that high. If we break that high, we've got a chance of a run today. I think more likely we'll probably hover there until 1:30, until the news. So I'm just going to leave it on, basically. In fact, I might just reduce risk slightly. I hate using stops, but it's either going to go or it's not. And if it does go, it's got a lot of potential. So it's a good looking trade. So I'm going to come back on this afternoon at 1:20 rather than 2:20. So there's no point in change in trading the open this afternoon, in my opinion. The market's going to move at 1:30. Yeah. So on a day where you've got a non-farm payroll, I call it non-farm payroll. It's not non-farm payroll. It's the unemployment rate. That's what's moving the market. Non-farm payroll is just a rubbish number. The unemployment rate is what we're trading. Everybody just calls it NFP because it's easier. But this is going to move the market this afternoon. So by the time you get to 2:30, the opening bell, the market will have put its moves in on the stock market. So the Globex session will have taken the vast majority of the liquidity today. So I wouldn't bother trading the opening range breakout strategy today on the New York Open. It might work, and if it does, fantastic. It's entirely up to you. I'm not going to trade it personally, but it may well fly. The most of the movement is going to happen at 1:30. So I'm going to come back on at 1:20. We'll watch non-farm payroll. If you do want to try an ORB with the ORB EA on non-farm payroll, you can do, obviously. So what you can do is use the ORB, and instead of using the normal opens you would trade for the range breaks, you can use either a 5 or a 15-minute range before 1:30 to trade the non-farm payroll spike. Obviously, news trading is can be incredibly rewarding, but also incredibly dangerous, because let's say, for example, that is your range before non-farm payroll. You've got two things that can happen to you. First of all, the move is incredibly fast and incredibly hard. Your order is either not going to get placed in time before it's moved, or you're going to get your order placed, it's going to hit your order, and you're going to get slipped up to there. So your stop loss, which was there, now becomes 3 times bigger, 3 times the loss. Yeah. So that is a danger there. Second danger is, first thing that happens is they widen the spread from there to there. They get you into the order and it flies to the downside and stops you out on your short, and then they pull it back, stop you out on your long. So you get a double-ended stop out. Then it flies off in a direction. So you get the whipsaw. Yeah. Other times, you'll get the non-farm payroll, the orders will go on and it will hit you, you'll get slipped a little bit and it will fly 10R. It's gambling. It's total gambling if you're going to trade news. So up to you if you want to do it. It's highly rewarding sometimes. I've had some amazing trades on it. I've also been slipped and lost a fortune. So I don't do it. But if you want to, you can do. In fact, I might set an account up just to do it, basically, just to see what happens. I've got another MT4. If you're trading prop, be aware, a lot of prop firms have rules around non-farm payroll. You can't trade it. So just if you are in prop and you're unfunded or on evaluation, you can't trade news with a lot of them for obviously that reason. It's just luck. So just bear that in mind. So I'll be back at 1:20 this afternoon. We'll watch what happens. And then I won't be on for the 2:20 session as normal. We'll just do the analysis and everything at 1:20 instead. Otherwise, I'll be back on Monday morning, 7:50, same time for the Frankfurt session. And then obviously Monday afternoon as usual. So if you're not on this afternoon, good luck. Fingers crossed it will go the right way. But otherwise, I will see you guys then. Okay, so have a good one. I will see you 1:20, and I'll put a note in Telegram now just to let everybody know as well. All right, have a good one. See you later.